Investment markets have dramatically changed. So what are the best opportunities off farm for 2024 and beyond? We're joined now by Ord Minnett's team of experts. We're going to delve into the equities and bonds debate. Malcolm Wood, David Lane and Andrew Gordon. Welcome to you all.
Thank you very much.
Thanks for being here.
Mal, we'll start with let's just hit the global context. What are the big factors, macro factors, impacting investment decisions today?
I think you've touched on it in your introduction, Lindsay. So we've got inflation for the first time in 3 decades. And with that, we've had this increase in interest rates from the zeros that we had during COVID. That's been a second issue. Then you go to the geopolitics, which has reared its ugly head again in the last couple of years after a period of, let's call it a quiet period. And then, of course, this year we've got a couple of very big elections happening, particularly in the United States at the end of the year. So there's a lot of new information that investors are needing to grapple with.
And you look at the, I guess, niche of agri-commodities, so much more volatility in that space too.
Correct. Yes, and so we had this big jump in commodity prices with the Russia invasion of Ukraine, both non-rural and rural commodities, and then things settled down over the last year or two. But yes, it's been a lot of volatility in that space.
Now later on today, Ord Minnett's going to have a huge crowd as you do the great debate. Bonds, equities. I'm going to put you on the spot here, David. Just sell me on equities. Why should I be investing in equities in 2024?
Well, equities give you the ability to have income, but then also growth as well. And what we've seen in the equity market over the last couple of years is very, very strong growth on many different industries, particularly in the IT sector. Globally, we've seen the rise of AI. That's helped investment markets go very well. So we've actually seen a bit of a purple patch as far as equities are concerned, because there has been a period of low unemployment, as you said, rising interest rates. That inflation has actually helped some companies who've been able to pass that through. So there has been the ability to generate decent long-term returns, but that's not always going to be the case, and there is the ability to look at other asset classes to give a bit more balanced return.
David, could you give a comment specifically on ag equities as well?
Yes, well, you mentioned the volatility in commodity prices, and that has had an impact on the agricultural stocks. Both Elders and AACo, which are two of the largest listed companies, have had the impact of lower cattle prices that has impacted their results. Both have actually performed quite well in spite of that, as far as their underlying profits are concerned, but the medium-term outlook is a little bit less positive, I suppose, taking into account the lower cattle prices and the higher input costs that they've had to battle with as far as inflation's concerned.
Andrew, you're our resident bonds enthusiast. Sell us on why we should be invested in bonds this year.
Well, Lindsay, David talks about return on your capital. Bonds, we talk about return of your capital. So it is a generally fairly boring asset class where we look at income, we look at low volatility, we look at, it forms a certain ballast for someone's portfolio, really looking to take away some of the volatility that David and Mal have really given us a really good snapshot of today. The fixed income portion of your portfolio really removes that, and that is why we think it's an important part for everyone to consider.
So Mal, weighing up equities, bonds, what's the perfect portfolio actually look like?
Well, that really depends on the investor and their risk appetite, but I think diversification is what the guys are highlighting here, the importance of having not all your eggs in one basket. There's this famous saying that there's one free lunch in finance, and that is diversification. You get extra return for the same volatility. That's why I think diversification rules the game.
A lot of fun.
We inspect goods, vessels,